Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, September 12th, 2019. We finally got that marginal new high that looks like SPY has been wanting to do for a while now. Doesn't mean we can't get any more, but it's effectively there. We popped intraday. Here, let me try to find a clean board here. And here, we'll use this one. I'll take this line away. Let me zoom in a little bit there. So you can see there it is. This previous high back here from July 26 was at 302.23. And you zoom in real tight there. You can see we ever so slightly took it out. So we'll see. You know, like I said, you got this close. The markets usually will try to make a run at those highs. Certainly wouldn't call it a false breakout or anything. It's just within just a couple pennies above that level. The high today was 302.46, and you know, a 300-point security. That's really technically insignificant. So we'll just call it a test of the previous highs. QQQ is a little shy. Let me go back to this board I was looking at here. Right about. Yeah, this one's fine. So, again, right now, the very near-term trend is up. I'm going to show you some 60-minute trend lines and developments I've been watching. I've skipped, we'll do every other day now unless there's any big developments on the public updates on the YouTube channel. Oh, and by the way, guys, if you're a YouTube follower, I may release a lot of, every now and then I'll go in and take the old videos that were premium content only, release some of those just if you want to see some of the other things that we cover, such as gold, silver, crude oil, natural gas, individual stocks, sector analysis, and all the other things that are premium content on the site. So just if you're watching a video, if you go in there and pay attention to the date. I always announce the date in the beginning and the time, and it's usually also in the title of the video and most certainly in the description. All right, so that's that. If we go up any higher, and there's certainly the potential to, everything I've been saying for weeks now, I don't want to make this video too long. Same old, same old. Any new high, well, this high today was a divergent high. We've made a marginal new high over that other high. Even if it's just an equal high and you have the indicators, in this case the PPO and the RSI making lower lows, which they are, then you have negative divergence. So divergence is not a sell signal. I always say that. It's just merely an indication that an impending trend change is likely. And when you have the divergences confirmed, they're not confirmed yet on the daily chart, confirmed, and it's just a term I use. You won't find it in the textbooks. I like to see the PPO then make a bearish crossover, meaning that that orange line, the PPO line, crosses down below the signal line at a point lower, because that will effectively put in a lower high. Remember, these are momentum indicators. They're moving higher. They can continue to move higher. So that needs to turn back down. And when you get that cross, you've then effectively put in a lower high. And so that's what we'll be looking for. Now, we don't have to go higher, but if we do, as I've been saying, the upside to me is minimal right now. Maybe another 2, no more than 3% most likely. That would be probably my upside guess. And so what I've been saying for many weeks now, and nothing's changed, the risk reward has not changed. The technicals have not changed. You had a divergent high here, we corrected, and that divergence has only been extended now and could certainly be extended for a while. When will it be gone? Will it be taken away or negated? Well, once we move over the previous high right there, especially where the divergence generates off of right here, this high back here. You can see the divergence line down there. So what else is notable on the daily time frame? Well, probably the biggest level I've been watching for quite a while now is this uptrend line off the lows on December 24th. We have these clean uptrend lines on both SPY and QQQ. I'm really focused mainly on what the large caps do. Small caps are not going to dictate where the stock market goes. It's the large caps that will dictate where the US stock market goes. So that's all we need to really focus on, are these two, SPY and QQQ. So you had a breakdown here, and just recently we've been back testing. So breakdown, we went in the trading range after the breakdown, broke above the trading range, and now we're back testing the trend line from above. Might continue to expect a reversal anywhere from really where we peaked today all the way up to about maybe another 2-3%. Anything much more than that would change the technicals, but as of now, that's my view on where I think we're going. And it has been for a while. This is QQQ, and you can see QQQ, unlike SPY, has not broken the trend line, and that's one reason that when we broke down below that trend line back on in the trading range on SPY, That's most likely why we didn't go much lower. Is you had this is although not as diversified as the S&P 500, it is the more important index because it holds those. It has a high weighting in the market-leading stocks, the FANG stocks: Facebook, Amazon, Alphabet, Microsoft, and those companies there. They came in, or QQQ came in, hit support, held it throughout the trading range there. In fact, that's why you had much higher lows in QQQ that you didn't have back then in SPY. SPY made roughly equal lows. So you can see there it's a pretty clean uptrend, and that's where we're at now. QQQ has yet to make a marginal new high. In fact, technically speaking, the S&P 500 didn't make one either. Remember, SPY is an ETF that tracks the S&P 500, and you can see right here, if I hold the line on the previous highs in July, you can see the S&P 500 is a little bit below. So just want to point that out. Again, we're talking, whether we go up 2-3% or we reverse here, it's such a small range for the amount of downside that I'm looking for on the indexes. So not really concerned if we go up a little bit more there. And I've also mentioned, actively trading, hedging with the metals. But before I was short the metals is a hedge to my equity index shorts. And recently I mentioned going long the metals because of the bullish chart patterns. Again, I covered that extensively on the site in the last couple days. All right, so here's SPY. Let's go to the 60-minute charts and we'll wrap this up. Here's what I'm looking at if you want to zoom down into the world of the 60-minute charts. And that gives you kind of a little bit heads up. It's more of the realm of the active trader. This is the most important trend line, I believe, right now, and that comes off here in the late August lows right there. Several reactions, and we've been forming this wedge. So as I've been saying before, and I'll continue to repeat, we have the charts are stacked right now. We have divergence, negative divergences all the way out from the 60-minute time frame to the daily, even the weekly charts, and if I'm not mistaken, on the monthlies as well. But the weeklies really that's will determine where the next major trend goes if and when those divergences play out. So what you have, there's a primary trend line, at least on the 60-minute chart, and there's a minor uptrend line right there, and we broke that today. We had a little dump into the close, impulsive break, so we'll see if we follow through tomorrow. We still closed positive on the day. You got to give it that, but that was that little false attempt at a breakout right there, a test of the previous highs, and then a rejection right there. If we come back in, you have some support right here. I'll show you minor support. We had a trading range for a few days there, but this would be the bigger sell signal. If this 60-minute trend line goes, that should open the door for the back test. I'm still looking for the back test of the top of the trading range at 294. So it would look something like this. Come down through there, maybe hiccup on that support, but ultimately come in here and make a back test of the August trading range right there on SPY. Remember, QQQ successfully back tested the trading range. SPY never did. It left that gap right there. So I still think there's unfinished business for SPY. QQQ, the way it looks on the 60-minute chart, you have the same trend line right here. I believe I already had on the futures. There's your what I call a micro trend line or a smaller minor trend line versus the more important trend line here. So here's what we watch tomorrow. Depending on what the futures do overnight, was this just a last-minute blip? There was a pretty good dump into the close, pretty impulsive, but it was also technically induced. Again, we broke that support level right there, so it wasn't just a random out-of-nowhere drop. Then you have some support around right here. Remember, we traded, and covered this. I didn't do a public video yesterday, but I covered this in the trading room. That's where I was long coming into yesterday, and then reverse there on my active trading account, reverse back to a short there, and I'm still holding on to those positions right now because we have this divergent high. As I said at the time, my initial plan was it was actually on NQ. We'll get to that. Let's just look at NQ. But before I leave QQQ, remember, this is the trend line you might want to replicate. It comes in with that it's comparable to that trend line I just showed you a minute ago on SPY right there. We have to exclude this one little blip down below, and that's fine. There's still enough reaction. So if that breaks, we've already tested 189.40 once, which was the top of the October trading range. If we come back down in there, we might enter the trading range at that point. So that would be pretty bearish if we do. And again, something to keep an eye on. Now let's look at the futures, and we will wrap this up. 60-minute chart. So these are just, again, micro levels that I trade off of, and you can replicate too. We had a trading range right here. That's the one I mentioned yesterday. When we broke out of here, at that point I went long on NQs, went to there in reverse. Originally I stated yesterday my plan was to sell 2/3 of my position, close 2/3 of my long, and then allow the remaining third to ride up, because I suspected we'd probably put in, we were like this before, and I suspected we'd put in this wedge right here. And that's what happened. Now I didn't, I ended up closing it all there, and then started to scale in. But you have this trend line here that broke, and here's a trend line right here on the futures. Comes in a little bit below that trend line that broke on QQQ. We might be able to pull that up. Let me look at this here. Let's zoom in a little tighter, because remember QQQ and SPY had those pretty clean. Yeah, you know what? That's we could certainly say that, use that as our trend line. I'll give it a little room right here. Let's just leave it right there on NQ. That comes in and catches the bottom of all these candlesticks right there and gives us a little downside. So here's what you're looking at if you're a futures trader tonight. Put a line right here, support right here. On today's lows, we had a reaction high there, and of course you still have, there's quite a bit of support, you know, in this micro. I'm getting granular here. Please understand that if you're a typical swing trader investor, none of this really matters much to you. This is just where, you know, active trading. I'm sometimes go long, short, NQ 3, 4, 5 times or more in a day. Reverse long, short, depending on how volatile the markets are. But usually just 1 or 2 trades a day if I'm actively trading. That's normal. So again, these are the levels to watch. And if we replicate it, we have a minor trend line like that. But I think a little bit more significant one a little below there. If that breaks, that should open the door for a move down to this. This is the most important trend line. If there's just one level you want to watch right now on the 60-minute charts of the futures, this is comparable to the trend line I showed you on QQQ, as well as SPY on the 60-minute chart. Comes off the late August lows right here. Pretty well defined. And that, of course, forms this rising wedge. So I said if we popped up here, and you know, it seemed like the market wanted to do it, and had the, you know, was pushing, and you can see it extended the divergence. So these are divergence lines. We had a divergent high right here, right there, and it did play out for a correction. Small divergent high, small correction. Small divergent high, small correction. Bigger divergent high, bigger correction. You know, it goes back all the way. Let's see here to this one right here. That was a big divergent high, big correction there. So that's what we're doing right now. If you take a step back, it looks to me as if we're wedging here. And as I say, when you're wedging up, the trend lines, the upper line is just simply a divergence line, more so than a trend line. I mean, you have a trend there, but the trend line it's respecting is to the downside. So this line could continue to do this. And it easily leads, maybe we morph into a price channel. You know, it's hard to really call a top until you see some evidence of a reversal. But right here, that would be a price channel like that. And so that's certainly a possibility if NQ, the NASDAQ 100, wants to run up and pop the previous highs again, give it maybe 2-3%, I think, maximum to the upside. That should keep those divergences intact on the daily chart. However, we may not get there. I mentioned this in the trading room today. In fact, let me just cover this. I know if you guys are not in the trading room, I'm sorry, it was on the front page of the site for silver members. I wanted to show you this, do the same overview I did. Okay, so this is SPY. This is the last 2 years. If you look back for the last decade, here's your bull market. But what's happened is this market in the last couple of years has been losing momentum. And so this is all the way back into January of 2018. So almost 2 years ago, not quite, a little shy of 2 years ago. And what I wanted to show you, and I did this in the video today, is as of today, right now, this is today's close, market's close, we are a whopping 5% above where we were back in January of 2018. So again, it's been a lot of big up and downs. It's a market that refuses to go down, but it's a market that's really not going up. That annualizes out to about, what, 2.5% a year. Again, I know that that's not over, we'll call it 3% if you know, we continue up. And you know, a lot will happen before the end of the year. But what I wanted to get at here is point out the fact that each new high in the market has been a marginal new high. So what I'm going to do here is show you, okay, we peaked there, followed by a big correction. I'm going to go do a horizontal line, so it shows you right about here we broke out. We broke out to a new all-time high. From the point of the breakout, actually over the previous high, from where we were, again, I'm grabbing the top of that high, we went up right at 2.5%. So that's what I refer to a marginal new high. It was a marginal new high. It was a new high I predicted would fail. Why? Because we had the same divergence. Well, there's all my lines, negative divergences, all the same stuff we have right now. And as I said, new highs that are a divergent high have a much, much higher rate of failure than those that aren't. So 2.5%. So what happened from there? I'm going to grab that high right there, top of the candle. And nope, I didn't get it. I need to snap to the very top. There it is. So we went right here. You can see as I hold this line horizontally, we popped up, made a marginal new high at that point of about 0.5%. Another marginal new high, biggest drop of the entire year up to that point, or so far in 2019. We dropped about 7.5% market. What happened from there? We powered on up. We made right here, we broke out the new highs. The market was able to rally above the previous high about, let me grab right on the top, about 2.34%, and then boom, the second biggest drop of the year. So that's been the MO. That's the modus operandi of this market. That's the pattern. Doesn't mean it will always continue, but technical analysis and trading is all about looking at past price action in the market, similar patterns, similar other similarities, and then trying to predict what may happen next. And so, you know, I'm a betting man, which I am. I'm going to say we're in the same conditions before, negative divergence all the way across the board, except what's even more important now is when you look at the weekly charts. When you go to the weekly charts, SPY broke down. We had the big divergences here on the weekly time frame, and we broke down. We've been back testing this primary trend line, or the trend line off this December 24th lows of 2018. Breakdown, back test, back test, back test. Whereas QQQ hasn't yet broken that trend line, but it's sitting precariously on that trend line now. And so should we fail here, what it would mean, last time we failed with the divergent high, it wasn't a big deal because we didn't have this trend line in place. There really wasn't any support. In fact, we fell and we hit the 200-day moving average, which is the 40-week moving average on this weekly chart right there, the red line. I pointed that out at the time. I pointed out covering, reversing, going long, expecting a bounce off there. When it bounced went a little higher than I thought it would, but again, it was an expected bounce. And until and unless that goes, so what will happen? What I'm getting at here, if those 60-minute divergences, the daily divergences do play out, as I suspect they will, whether it's another 1, 2, 3% up or not, what you're going to look for is a break, an impulsive break, especially a weekly close below this uptrend line, and then that 200-day / 40-week moving average. That should be the nail in the coffin. That should be a pretty powerful sell signal to well-watched levels, and then that should open the door for the next leg down. So a lot of little steps need to happen first, and that's why, you know, every time to time I like to jump back to these weekly charts and let you know that, you know, the charts are stacked, meaning if this little 60-minute wedge plays out, that could then trigger some longer term or more powerful sell signals on the daily chart, which can then in turn trigger some, ultimately trigger some breakdowns on the weekly and even monthly charts if we get there. So that's it. There's the levels to watch. The near term trend right now is up, but I gave you, I think I did both ES and NQ. If I didn't, here's ES. I think I started with NQ on the futures. Again, these same trend lines that you have on SPY and QQQ, they come off here on the late August lows. Pretty well defined. We're working our way up, and again, right now we're wedging. Should the indexes pop a little higher, maybe that morphs into a price channel, or if not, watch this trend line. There's a pretty clean trend line in ES right there, and if that trend line breaks, then it bring us back here. 29.85. It's pretty good support. But if that breaks, look, it comes in right around the level here, right where that trend line does as well. So this is probably the sweet spot we need to watch. Trend line, and if you want to give it the benefit of the doubt, wait for 29.85 to go, and then that should, I would think, open the door for a back test of the August trading range. And again, that might have more bearish implications because that would tell, if that plays out, try to visualize this a week from now, or probably nothing big until the Fed meeting next Wednesday. You guys know that 2 p.m. they'll give the FOMC announcement. Tomorrow, I think we have retail sales tomorrow at 8:30. That can be a market mover. If I'm not mistaken, industrial production at 9:15 on Tuesday, I believe. Maybe it's Monday. I think Tuesday. So those are some potential market moving reports. So might be a lot of noise and chop, but either way, If we drop down here and go below that trend line, that would bring us down there. And again, what I was saying is try to visualize what that might look like on the daily chart. I'll show you what it would look like here. If we fell, it would be a failure of SPY on that test to the previous highs, or call it a failed breakout if you want. Like I said, I'm not going to call that a bull trap right now because we didn't take it out with conviction. Call it what you want, but either way, previous reaction highs, especially all-time highs, are certainly a well-watched resistance level. So, like I said, if we were to drop in the next week or so or coming days here, then that would be a rejection off or a failed attempt to break out to new highs once again. And then, of course, like I said, you have that all important August trading range, the top of the range being right here, and anything below that, we start to really do some technical damage at that point. All right, let's wrap it up here, and we'll pick it up tomorrow. If anything big happens before the Fed, I'll certainly pick up the frequency updates. But if tomorrow is a kind of a flattish day, maybe we'll skip the end of day public update. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.